Okay, this is Brent again from tradeguild.blogspot.com, August 4th, 06. And we're going to move on to our next stock, which is a long position that was mentioned last night, and this has been mentioned quite a few times on the blog recently. It's GPK and Graphic Packaging International. And I've been in this stock for a little while. I was playing an ascending triangle. I've given up on the ascending triangle. But what we do still have here is a nice consolidation, a rectangular, well, it's really a trading range at this point, but it's still, it is buyable, it is playable. You can see it's pretty much trending between about $3.40 and $4. I'd like to probably buy this one somewhere in this level at $3.60. You can buy it all the way down to $3.40. Here's your stop. It breaks out below that $3.40 level, I'd stop out. It breaks out above this $4 level, you could even add to it. You could add to it after it breaks out and then pulls back. If you get a breakout above that $4 level and it pulls back within this consolidation in a day or two, that's a failed move, and I would not hold it at that point. More or less, kind of that's what we saw in the market today. We saw a breakout and a failed move. So we want to be on guard. That could go badly against us very quickly. I'm not saying there's a high likelihood or high probability of that, but it certainly is an increased possibility. We're going to move along now. Take a look at another thing. Just 1 minute. I just want to see what this, yeah, there it is. Okay, on a 5-day chart, there we go. And this is one of the reasons I'm being a little bit more lenient with this pattern. And I'm not just saying, okay, it's a failed ascending triangle, let's get rid of it. Look at this money stream divergence. I mean, it is flying. It is like probably at all-time highs. Yeah, it's darn close to all-time highs. You have to go back to 1995 to see higher highs in money stream. So for all intents and purposes, this is a leading divergence. It's very bullish, very powerful. TSV looks the same. You know, the long-term chart here looks really, really fabulous. So I'm a little bit more lenient with this pattern than I have been with many failed ascending triangles. So, you know, review it and see what you think. Next up is SLXA, and this one's been mentioned many times on the blog before. I still have this same screen up with the weekly chart of Warden's proprietary indicator money stream and BOP and TSV in the bottom window, all accumulation distribution indicators. Basically, they track the underlying action in a stock. You know, people, hedge funds, they don't want to just come out and buy and drive the price up and create a higher price point for themselves. They want to accumulate quietly, and these indicators do a good job of tracking them because that's what we do in technical analysis. We follow the leader. Anyway, so SLXA, here we go, big ascending triangle. You know, it's kind of at the point where it's time pretty much for a breakout. I don't think I would hold this below this 850 level. I don't know. You have to make the call. I certainly wouldn't hold it below the $8 level over here. But still, a good possibility for this one to move much higher. Now I am going to switch gears, and we're going to look at some short stocks that I mentioned last night and what the setups were. So here's MSTR, MicroStrategy Inc., Business Software and Services. And if you've been on the blog at all, you know kind of this is one of my favorite setups, shorting into resistance at the 50-day moving average on weak rallies up to that moving average. So basically, you know, we would have gone short here, and today was a great opportunity again to go short this stock. And if I can just zoom in for you, we're going to take a closer look. And here's what happened. A gap up in the morning, great opportunity because it's still below that 50-day moving average. It poked up a little bit and it broke back down below. If we look at a 10-minute chart, here we go. And here's this morning's gap up higher and just broke down. So there's plenty of opportunity to go short this stock. We'll talk about some intraday strategies maybe this weekend. But definitely this is a shortable stock, and what you'd really want to do, and we got this, I don't know what people call it, the kiss of death or something, with the 50-day moving average breaking below that 200-day. But resistance at both moving averages. If you wanted a wider position, you could use that 200, or yeah, you could use the 200-day. We also have a little bit of resistance in this level, which clearly we are sitting pretty much at today. So a move above either the 50 or the 200 over here, and you stop out of that position. Let's look at our next one, which is GPI. And GPI was a short, oh, wrong symbol. GPI was a short from a while back, and I said, you know, this needed to be covered because it broke above that 50-day moving average. It's subsequently broken down. Here's the play. We want to see a rally up to this 52 level where this former support level is. That's now resistance. People bought in here, and they are going to be anxious to sell when price comes back up to that level. So if we can get a move up to that 52-day or $52 level, then that is shortable. And basically, if it breaks above that level, and maybe even up to this 54 level, you know, you definitely want to stop out at that point. But GPI, it may just continue going down. It made a new closing low today for this move, and you can short it that way too. You can say, okay, momentum, let's take that, and say this area right here around 51 is our stop. That is a viable strategy. It's more of a momentum type of trade, but or swing trade. But it works, so you know, either way you can try it. And let's move on. So the next one is EXPD, which was on the blog last night, again as a short. Let's see what we have here. Yeah, basically this one, here's the play. I'm looking at this gap. This gap down is actually going to create resistance right at this level, right here. That's resistance. So a rally up into this 45 level, or 44.60, 44.50 is a good short. We didn't make it up there today, but you know what? We got darn close to, what was the high today? 43.50. So you know what? 43.50 would have been a fabulous short. Even where it opened at $42.99, $43 would have been a decent short. You know, you have a $1.50 risk, more or less. If it closes above this rising window gap, or falling window gap, I'm sorry, then you stop out. So that's a good trade. That was a trade you could have definitely entered today. Let's look at the next one, which is TNB, Thomas and Betts Corporation. I'm sure you can tell, you know, what the play here is going to be. A move on this 50-day moving average is shortable. Even a move right here, I would have gone in today if I had an open slot in my portfolio. You know, it's bumped up into this 200-day moving average, and it's not really doing much around it. The volume is kind of petering out. On a longer-term chart, we can see money stream has just kind of plunged down to the $25 level. You know, that might not be a fair scaling representation of where the stock is going, but you can clearly see it's on a long-term chart not looking real spiffy. So TNB is one to keep an eye on. Maybe you get another opportunity there. Let's take a look at MIND. And here again, you know the setup. These moves up to this 50-day moving average are all shortable moves. Right in here, we saw a move, a push up to that 50-day moving average on an intraday basis. So you could have shorted it there and said, okay, I want my stop above that 50-day moving average, above this little congestion area, and said 1352 is going to be my stop, or whatever, you know, you choose the number. So not too much risk there. That was a doable position. I just want to see how it looks on one other. Okay, well, we'll skip that for now, but mine was a workable position. We're going to take a look at one more before I come. Actually, you know what? I'm going to come back with another video so I don't have to cut this short. Just hang tight.